Hi trader, and welcome back to IFX Success. And I'm gonna go over 3 tips, or maybe could be more, but on how to improve our strategy here, what we're using with the reversal blocks and our trend blocks. And I know that pretty much I never have anything written or pre-recorded on what I'm going to say, so pretty much this comes all from my head. I don't rehearse on this. I like it to just be more like natural. And so we all know that trading could be hard because it's very emotional, it's very psychological, meaning that when we're in a trade, we always want to be perfect, we want to be 100% right. And the matter of fact is that we don't know what the market does. The market does its own thing. We don't have 100% sure an indicator that does not repaint, right? They all ask me, does the indicator repaint or redraws? And then to me is like, oh my God, please, if you find an indicator that doesn't repaint or redraw, send it over to me so I can finally make my $1 million in here. So pretty much there's the market is a live market. The market moves ups and downs, and we will never know 100% when is it going to turn around. So we have expectations. When we practice price action and learn market structure, we can have an idea, but we don't know 100% where if it's actually going to turn around. And although we can get an indication, hey, finally I'm going to turn around, we might even sell, and then we might be 20-30 pips positive, and then all of a sudden it's just going to turn around on you. And so again, don't be afraid. To many it's like a nightmare when they find out that an indicator redraws or repaints. And if you really don't like that, or you hate that, or it just scares you so much, well, I would suggest then to look into something else, not to look into trading, because again, there's never 100% sure what the market is going to do. All right, so now most of you already know the strategy in here. We use 2 types of blocks, the reversal block and the trend block. So the reversal is in gray and the trend block will be in green if we want to be buying or bullish, and the ones in red will be bearish blocks. Okay, so now again, so the indicators redraw, so we would have had an entry over here. So the first tip that I want to go over is how can we actually tell when is going to redraw, right? Well, yes, it is very hard. I will not be able to tell you exactly, but the best thing that we can do is to look for any support or resistance. So right over here we have, let me just erase because I was doing a Spanish video. So we have in here this magenta line, which we do the mid-level prior day mid-level. Pretty much this is the daily mid-level. What happened, we're just breaking in half that daily candle pretty much. So this was the daily halfway. This is the low and this is the high and this is halfway. Okay, that's pretty much the way I use this. So the way I use this is that we have, you can tell, we can see move ups and downs. We can kind of see steps going down and steps going up. So if we have steps going up, we know that we have an uptrend. And when we see a first step going down, we can tell that it could be an initiation or a start of going into a downtrend. That would be our first tip that the market is going to turn around. So now that we know that, we use the prior day mid-level because that one is fixed. It does not repaint, it does not redraw. Is actually there already, and I use it as support and resistance, and I use it to re-enter the market when I get a trend block entry. Okay, so what do we have in here? If we go back to this example, we had a entry, we had a buy entry over here. The markets, we know that we're in a downtrend just by even looking at my prior date mid-level. If I am below the prior date mid-level, I can consider it a downtrend, whether it's short or long term, right? So we have here an up that went up to the upside. Then over here we would have had a block to sell, but unfortunately it did not keep on going lower. It keep on going higher. And if I draw a resistance line right over here, what did the market do? It actually came to look for this resistance, and then eventually, well, this was the end of the day. It didn't do much, got stuck onto the next day, but we're gonna talk about this for a bit. Now, yes, I would not be able to tell you, hey, the further away the blocks are from each other, that's the better it is. That's one of the first kind of idea. I would not be able to tell what distance do you suggest that we actually enter. Well, I would not be able to tell you that, but the best thing I can tell you is that you should be able to look for some resistance, and the first resistance could be your prior day mid-level, or any other resistance that you can find when you're using, when you're trading. We have right over here, we can have another resistance, this candle right over here, we can have resistance too. So we can use resistance levels or supports when we want to buy and we want to sell, right? We want to look for confluences. Some other people use other indicators that helps them guide them into those entries. But if by any chance you got into here, well, unfortunately the trade would have turned around, it came up to this resistance, and then eventually it's starting to go down again. Many people know that I use the 4-hour and the daily candle as a confirmation for re-entry. So right over here, I have these blocks of time separated. So I would like for you to try it. It's not mandatory that you can separate your 4-hour blocks into trading. So this was the beginning or the end of the 4-hour candle. So this was the time block of the 4-hour candle. This was a new block of the 4-hour candle. And we're able to tell that this 4-hour candle from here to here went up. Then the market kind of consolidated here. And if we want to buy or sell, we want to be going with the direction of either the daily or the 4-hour candle, preferably the daily candle, which we have over here. So this is the daily candle and this is the 4-hour candle. Okay, this is another example that I want to go over in a few. Okay, so now when we enter, we want to go along with those candles, right? We want to be able to tell that if we enter, what are the highest probability that that trade is gonna go my way when I get a block entry, whether it's a reversal or trend block. So if you would have entered here, you know that this could be a resistance, and it actually hit it in here. And then what did the market do? Kind of stole down, but on the next day, this is my daily separator, they actually came down, right? It actually moved down. So this was an actual good thing. The other thing that I really want you to think about is the M and W formations. We all know that if the market is going up, even if you're just using within the same time frame, we would like for the market to retrace or retest the block and then eventually start coming back down, right? That's what we want or expect the market to do. Well, one of the things that you could do is wait for a retest. So right over here, the market gave us this block. We're gonna go over now with this one. It hit a nice resistance. It went back up again, which was over here, and we got this arrow, which was a retest of this block, trend bearish block right here. And what did the market do? If you would have held this entry, then eventually it came back down, right? So your stop loss would have been right here, or wherever you want to put it. There's not really any rule on stop loss. It's whatever you desire, which we're going to go over onto the next tip. So that's pretty much it. When you're going with the trend, the main idea is what? Remember, the main idea in here is that we make sure that a couple of things are going on. If I go here on May 5th, I'm going to go here to the 4-hour. We know that we need to look first for a bearish block on a higher time frame to happen first. So what we do is, in order for you to enter on a smaller time frame, you need to make sure that on a higher time frame we have blocks going into that direction, right? So if I have a bearish block on 4 hours, then I'm going to look for bearish blocks on 15 minutes. You can also go based on 1 hour. So if you have a bearish block, which happened over here you can look for entries on 15 minutes. So right here, we also had a retest of this block, and then look, this is our daily, prior day mid-level. And then what did the market do? Boom, it dropped. It retraces back to the daily prior day mid-level, and it dropped again, and that is exactly what the market does. So daily mid-level is like, wow, it's awesome. It's like a magic. Okay, so that's the main idea. We look for higher time frame blocks to happen first. Then we move on to 5 minutes or 15 minutes, whatever you desire, and we wait for a block to happen. So ideally, yes, they redraw. I will not be able to tell, how often, or when it happens, what should you do. So then what you want to do is look for a resistance, a confluence, that along with another indicator if you wish, and then wait for a block to happen in there. And then once it does that, then you know that you can enter on that, right? That's going with the trend. So tip number 2 would be, what about when we're going against the trend? What about if I want to buy when everything is bearish, or when, even if we get a bullish breaker block, then when can we buy? When can we go against the trend, right? So again, a couple of things that you should know is that, first, where is your mid-level, your prior date mid-level? You need to assess that. As first is like, at least if you want to go against the trend, at least you want to go to 1 hour and wait for a reversal block, a reversal block in the one in gray. So you want that to happen first, or if it's about to make it or about to happen, wait for that. It's the most recent time frame. The second thing that you want to do is then move down to 15 minutes and then wait for a block, a trend block, which will be the red one, going into that same direction, right? That's the second thing that you want to do. And the third thing is, where are you in comparison to the prior day mid-level? If you're too far away, if you're close away or not. If you can tell, we had here a block, and then the market, if we're inside this up level, the market is not gonna go down too much. This is going to act as a support. So the best thing that I can tell you is, always when you want to do that, always wait for an M formation to happen or something like that. If you want to go against the trend, so you want to wait for the block to happen first. Even though you got a block happening in 1 hour, you want to wait for a retest of this block just to kind of see, hey, maybe it is gonna go down, even just for a few pips. And you want at least 4-hour candle, or best, the daily candle going bearish as well if you want to sell. Then your take profit should be close to here, if anything, but you should not let this trade run for a long time because you're above prior day mid-level. Now, this next thing that you need to assess, if you want to wait then for the next day, then all you have to do is say, I will wait instead to be below the prior day mid-level, and then enter on that. So you would enter on this day if you're below the prior day mid-level, and you're able to tell that it went down, not as much as we would like it, but it went down. Here it acted as a nice resistance, and it kind of got stuck in here, and then eventually came, kind of crappy market. But if you're able to tell, look at this block entry over here happened above my prior day mid-level, right? And it actually went up really nicely. So that's what I'm saying, your prior day mid-level is a best guidance, and the second guidance are my candles, 4 hours and 1 hour daily candle. Those are like top things that I need to know what's going on, along with my blocks in higher time frames. Okay, so tip number 3 is actually what can we do to actually see better a risk-reward ratio, right? So one of the things that I suggest is, when you go into your Fibonacci tool, this one right here, well, I have one here already. What you're going to do is if you don't use fib levels, what you can do is change it up a little bit. You're gonna go to fib properties, and what you're going to do is change it up. What you're going to do is put 0 as your stop loss, 1 as your entry, 2 as your TP1, 3 as your TP2, 4 as your TP3, and so on and so forth. I have it up to 10. Right over here, I have it up to 10. Right? So my risk reward would be, the 1 up to 10 or even more, right? So what did I do? I was just doing an example before, is that right over here on my right hand side, if I wanted to buy, then I said, okay, this was my buy entry. I got a retest of this reversal block. Of course, this is not the best entry because I'm going against the trend, but this was just an example. So what do I do is, if this is my entry, how much am I willing to risk, right? So if I say I'm willing to risk if it goes below this candle, the only thing with my stop loss is that I wait for a candle to close below, not to have it wick. Sometimes the price might wick you out or you stop loss and keep on going into the same direction. So this is very important. If you wait for a candle to close below your stop loss, yes, the levels in here might not be the same because the stop loss could be a little bit lower or somewhere in here, depending on how big or small is that candle that closes below your stop loss. So there's no right or wrong on where your stop loss should be. You can either use it being below the reversal block. It all depends how far you are from it. So if a candle closes below my reversal block, then my TP1, TP2 are going to be higher. I need to know where any possible resistance. So I have a resistance over here. I have my prior day mid-level resistance over here. So I have a lot of resistance. So I know that my TP3 is possible, but hey, it could be hard to get there. So if I lower my stop loss now, my risk reward is going to be even higher. Now, right now, it's about to hit my TP2 if I leave it as here, right? So it all depends how much you change it. You might say, hey, I might want to give it maybe this candle. If it closes below this candle, then I will close it and stuff like that. So it's about to hit, this would be 1 to 1. If I lower it, now I'm about 2 to 1 right now. If it keeps on going higher, it will be 7 to 1, which will be great. And maybe it might reach to here, to this open block, or it might reach to my prior day mid-level, which will be here somewhere in between 8 and 9. So that would be great. So my risk reward here would be almost 8 times more than I would have risked on this trade, right? But again, it is tricky because it is something that I wait for a candle to close. So my candle could be closing later, wait lower, depending on market conditions, right? Now, the second thing, that if I'm going against the trend, it's best to wait for W formation. And as you can see here, our 4-hour candle is actually bullish. And, my daily candle is about to turn bullish somewhere around here. So that's some good news. So once it actually goes higher than TP3, it's going to be bullish. This daily candle was already somewhere around here. So it has capacity to come back to this where it was already, right? To TP7, TP6, somewhere around here, the market has been already. So it can definitely go back to that. So that's another tip that you can use. Hey, where has the market been on this current day? Can it go back to that? Most definitely it's about to turn green or bullish. So I'm gonna see if I can just pretty much just risk this and then hopefully get it up to somewhere maybe 7, somewhere around here where the market has already been to this resistance, right? Can it go higher? Well, most definitely can go higher, but we don't know. So one of the things you can do is then once you see it going higher, you can start putting in your stop loss to a TP2, TP3, kind of keep bringing it up step by step until if it retraces back, well, you will know that at least you got 5 to 1, so on and so forth. So that would be tip number 3. how to actually see this better, your risk reward ratio, which is going to increase your performance and is actually much better, you know. And this is going to make you can make it a habit, and it's going to improve how you when you get out. So if you say if it gets out of here, or if it closes, which is better, I'm out no matter what happens. And then that is how you keep your losses shorter and you be able to make your winnings bigger. All right, traders, so I hope this was helpful. If you have any questions, you can join the Telegram channel where I can, answer your questions there, or any other trader. You can send me an email, and if you can leave a comment and like the video and subscribe, and I will see you around.